Should we expect inflation to continue at these levels into the new year? And if so, what should you do with your money? I've got that and more coming up. My name is Mike Bernard. I'm the host of the Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. All right, so obviously 2021, shocker to everyone. No, just to the Fed. We actually had inflation. We saw inflation and at the fastest rate in almost 40 years. Through November, inflation was what, at 6.8%, highest since 1982. Come mid-January, we're going to get the official December number, so we'll see what inflation clocked in at for the total calendar year of 2021. But that's an astronomical number. And I'm going back to September of 2020. When the Fed changed their tune and they said, listen, we actually want inflation. Instead of targeting inflation at 2%, we want to average 2% inflation. And so we're going to try and heat things up. And gosh, we were sounding the alarms. Lots of folks were sounding the alarm saying, listen, you can't control this thing the way that you think. And you print that much money and you're going to create this buying frenzy, this panic buying, bidding up prices. And inflation could be a real big problem. And no, they denied it. And now they've said, yeah, it's a problem. Will it continue at this pace in 2022? Many experts expect that inflation will actually calm down a little bit in 2022, not back down to that 2% level or below, but likely not to remain at the 6.8, 7% inflation rate again for the upcoming year. I think there's some logic to that. I've done some videos on it. I think there's some logic. It does make sense that we'll still see elevated prices, elevated inflation. Why? Because so many services, so many businesses reset their prices, reset their employee wages for the beginning or at the beginning of the year for the new year, right? Inflation was moving so quickly that businesses were changing prices all throughout the year. That's obvious, but lots of businesses still just reset that or take another look at the beginning of the year. And from what I can see, many businesses, they're talking about inflation. And so one economist said one way to get inflation is to talk about inflation. People are talking about inflation, and so businesses are putting upward pressure on their prices, and people are getting paid more. I think both of those will keep inflation at a higher level. Will we see it at 6.8, 7% in the new year? It's possible. It's possible. I would still expect it in the 4 or 5% level. So inflation's still going to be a problem. I think a greater problem will be what inflation does and how the Fed responds to it. So that will play out in this upcoming year. The question, though, is what do you do with your money? What should you do with your investments? Where's a good place to put dollars if we've seen heightened inflation and we're likely to see above average inflation upcoming? The first asset that I would tell you that does well during inflationary times, and I know you might disagree with this, okay, but the data supports it, logic supports it as well, and that is stocks. Stocks tend to do well during inflationary times. Yes, when inflation is dropping, interest rates are dropping, stocks do very well. But over time, if you're looking for an asset or an investment that handedly outperforms inflation, meaning provides a real return, meaning provides a return above and beyond inflation, that beats inflation, it's stocks, it's equities, it's the stock market. Is there volatility? Absolutely. But over long periods of time, the stock market should outpace inflation. And during inflationary times, the stock market should still do well. Take a look at this chart here from A Wealth of Common Sense, Ben Carlson, and pretty incredible data as far as the years where we've had really high inflation and what the stock market's actually done. Now, those are isolated years. If you look at it on average over time, you'll see that the stock market does provide a real return, meaning it over time beats inflation and provides you with a real return above and beyond inflation. I think what people are concerned with stocks is hyperinflation, how will stocks do, but then Fed and policy response to try to combat inflation or get it under control. That's what tends to create some challenges in the stock market. But if we're going to see inflation, which we saw last year, and we know stocks performed really well, okay? But if we're going to see inflation, and if it is more muted, say that 5-6%, and Fed and policymakers don't overreact to it, I would expect that stocks would continue to do well also. So the very first place I would look to put money if you're trying to do something with your dollars during an inflationary time, the first place I would look is the stock market. And I've mentioned this before. Logically, as prices go up, the value of businesses go up. Why? Because they can charge more for their services, i.e. their revenue goes up, okay? And businesses that have a lot of fixed costs, okay, those costs hopefully have been locked in and aren't immediately adjusted with inflation, and therefore their profit margins can hopefully stay intact. All that means, even if their profit margin, stays intact or doesn't drop, the fact that that's a profit margin on a larger number, on more revenue because of inflation, means the business is worth more in the stock market is the aggregate of the value of the businesses, of the largest 500 businesses in the United States. So stocks should do well and have done well during inflationary times. The second obvious one, and we saw it last year as we saw inflation heat up for the first time in 40 years, is real estate. We've seen panic buying. I mean, one definition of inflation, the simple definition, the one I like, is when you have too many dollars chasing after too few of goods or too few of supply. That means prices get bid up. And tell me if you've heard this one with real estate, that a house was listed at this level, and there were so many people bidding on the house that they ended up selling for a price well above that original asking price. Yes, we've heard, like, that's been the trend. In many areas, that's sort of the expectation if you're selling your house. That is inflation. That is inflation. And I don't have the data right here in front of me, but I believe the last time I looked, on average, home sale prices are up 11%, double digits, okay, double digits. And so I would expect that would continue as well. Again, if policymakers overreact and increase interest rates really, really quickly, that could influence mortgage rates. That could put a damper on the accelerating prices in the housing market. But as of right now, we've seen interest rates actually come down, mortgage rates actually come down and be a little bit more calm in the face of these prices skyrocketing. So second place that I would consider putting dollars during inflationary times is real estate, whether you own your own home or whether you're looking at rental properties. The caveat that I would throw in this is how much of this price increase has already been priced in, and are we at bubble territories? That has me concerned. But if you're just looking at, all right, what investments tend to do well during inflationary times? Real estate. Is real estate already in a bubble? You could definitely argue that by looking at long-term trends. However, if we don't see an overreactive policy response or some other big shocks in the market, hopefully real estate would continue to do well if we continue to see inflation. If you're looking for some place to put your dollars that's a little more calm, less risky, but should still do well during inflation, don't look to bonds. Bonds typically do not do well during inflation, especially right now, as the Fed is wanting inflation to be high and keeping interest rates low. Your bonds will not be able to keep up with inflation. And likely, I mean, the addition to that is likely when policymakers say, okay, it's time to catch up, we've got to increase rates quickly to try to combat inflation. As they increase rates, bond values, bond investments tend to drop. So on average, bonds typically aren't a good place to put dollars during inflationary times. There's two pseudo exceptions to that, okay? So if you are looking for lower risk investments for your dollars and want to be aware, do something that is sensitive with inflation, I would look at TIPS, Treasury inflation protected securities, okay, for 2021, where Typical bonds were down a couple percent. Treasury inflation protected securities TIPS, the TIPS index was up over 5% approximately. So TIPS are special bond investments from the Treasury that adjust with inflation and should do okay during inflationary times. The other one, though, is I bonds, okay? And I'm not talking about a new bond that's come out by Apple, okay? I'm talking about inflation bonds. These are Treasury bonds that offer a variable rate. The interest rate is locked in for 6 months. That's it. And then it shifts, but that shift is based on inflation. Right now, these I bonds up until April of 2022 are paying 7.12%. That's incredible. Now, that could change. That could go up, that could go down, that could go to zero starting in April of 2022 for the next 6 months. But very interesting place to park some dollars, some safe dollars if you're looking for something, again, low risk, but that should keep up with inflation. So here's some information on I bonds there. Check it out. It's got some limitations as to how much you can invest into them, where you can hold them, that sort of thing, but something to consider. The final just honorable mention is commodities should do well in aggregate, in general. We've seen that. Lumber prices went way up, they crashed, they've come back up. We've seen energy prices go way up. The thing that we haven't seen go up within the commodity space is gold. That is that's bizarre because gold did so well during the high inflationary times, the late 70s and early 80s. Like that was gold's heyday right there. But no, gold has been atrocious actually over this recent time period where we've seen inflation. So to me, and I've shared this before, it's hard to come up with a calculated value of gold, an intrinsic value. There is some intrinsic value to gold, but how do you calculate it? For stocks, for Apple, let's say, I can look at the amount of assets, their revenue, their profits, profit margin, and dividends, all that sort of stuff, and I can come up with, all right, here's where the price could be in high, medium, and low environments. You can't do that with gold. And so to me, that would be an unsure place to put dollars during inflationary times. Again, it did well during its heyday back when we had hyperinflation, late 70s and early 80s. We have not seen that work well this year. Bitcoin, a lot of people think, well, Bitcoin and cryptocurrencies should do well with inflation. In my opinion, too early to tell. Has it done well during this inflationary time in the last 15 months? Absolutely, but it's been extremely wild, a wild ride, okay? I think that has less to do with inflation, more to do with speculation, in my opinion. So what do you do with all this? What do you do with all this? Whatever decisions you make, they need to be connected to all 6 areas of your financial life. What to do with your dollars? It may be paying off debt. It may be building up an emergency fund. It may be switching from contributing pre-tax to contributing Roth. It might be making sure that you're better diversified, but it also might be ensuring that you've got the right allocation to stocks, some to real estate, some to tips, that sort of stuff. Work with your CFP on that. They're your guide looking at all 6 areas of your financial life, helping to apply wisdom amongst great choices, good choices, which is the great choice that brings synergy to all 6 areas. Your CFP can help with that. If you don't have a CFP on your team, you can contact one on my team. Find us online, Korhorn.com. That's Korhorn with a K. WiseMoneyShow.com. You can find us there as well, or give us a call, 574-247-5898. All right, there you have it. Go out and take your next wise step in your financial life.